Big headline to kick us off, Meta has just signed multiple deals to secure nuclear power for its Prometheus AI supercluster in Ohio. Quick recap. TerraPower, Oklo, and Vistra are on board, and Meta says this could support as much as 6.6 gigawatts by 2035. That's massive.
Right. TerraPower's deal funds Natrium reactors, 2 units initially and rights to more. Oklo is building a 1.2 gigawatt campus that could show up around 2030, and Vistra will extend and expand existing plants while adding some incremental capacity in the early 2030s.
So why is Meta doubling down on nuclear when renewables have been the darling for a decade?
Simple, firm, dispatchable power. AI superclusters need enormous, predictable baseload energy. Wind and solar are great, but nuclear provides steady megawatts when you need them. There's also a strategic play, securing long-term supply, supporting the U.S. nuclear supply chain, and locking in prices and jobs. It's a long-term capital bet. Capacity mainly comes online around 2030, 2035, so Meta's planning way ahead.
It's interesting to see big tech lead in nuclear procurement. Definitely reshapes how data centers think about power.
Switching gears, 3 Democratic senators have asked Apple and Google to remove X and the Grok app from their stores after reports that Grok was used to generate sexualized images of women and children. They're arguing the apps violate store policies and ask for a response by January 23rd.
The heart of the complaint is nonconsensual sexualized content, including images of minors, and reporting suggesting Grok still had those capabilities for paying subscribers. The senators say partial restrictions aren't enough if harassment and illegal content can still be created at scale.
Tough situation for app stores. What's the practical consequence here? Removal, stricter checks, or something else?
Legally and reputationally, app stores can and have removed apps that break content rules. Practically, Apple and Google will weigh enforcement against precedent and pushback. The bigger issue is design. Why did image controls differ by payment tier? Platforms need consistent, enforceable safeguards, better model-level guardrails, and transparent auditing. If checks fail, regulators and stores will act, and public pressure is high when minors are involved.
It's a reminder that monetization can't trump basic safety controls.
Toy tech alert. LEGO unveiled its smart brick at CES, and the first smart playsets are already on pre-order, including Star Wars themes. The brick is sensor-packed, recognizes smart minifigures and smart tags, and responds to motion and context.
LEGO spent about 8 years on this platform. The goal was social, imaginative play, not slapping screens on blocks. The smart brick tracks movement, proximity, and tiny tags that tell it whether a piece is acting like a car or a helicopter, and it can play sounds or change behavior accordingly.
I can hear the joy in parents' voices. The adult LEGO community, though, is split. What are the trade-offs?
For kids, it's huge. More emergent play and reactivity. For adult collectors, concerns are price and the creeping digitization of a very tactile hobby. LEGO tried to make the tech invisible, but added capability means higher cost and ongoing platform expectations. If LEGO nails upgradability and keeps a strong analog offering, this could expand their audience. If not, some fans will grumble, loudly.
As long as the bricks still click, I'm happy.
CES delivered the usual carnival of cutting-edge and eyebrow-raising tech. Humanoid robots pouring coffee, a swarm of AI companions, and a mixed bag of genuinely useful devices alongside things that won worst in show.
The show felt split. Practical robotics that can do chores and interesting health and fitness innovations on one side, and gimmicky voice-locked fridges or fragile novelty gadgets on the other. AI companions and collectible chat toys are everywhere. Companies betting conversational interfaces will stick in the living room and on shelves.
Are consumers ready for a robot to fold their laundry, or is that still sci-fi?
We're at the cusp. Demonstrations are impressive, but real-world reliability, price, and safety are the hurdles. Useful, buyable robots exist at the periphery today. Vacuums, mops, climbing cleaners, but fully general humanoids are still expensive and fragile. CES shows where the market might go. It doesn't guarantee mass adoption overnight.
So practical now, aspirational soon, classic CES. Last up, the market. AI enthusiasm is roaring. Deals, IPO demand, buy calls, but also bubble warnings from some analysts. How should people parse it?
The market is polarized. Operational AI wins, robotics partnerships, industrial AI are producing real revenue signals and move stocks. At the same time, speculative stories and hype around consumer-facing AI can inflate valuations. Chinese AI IPOs pulled strong demand, and some analysts still predict sharp downswings for select names.
For investors trying to be pragmatic, what's the playbook?
Focus on fundamentals: revenue, margins, enterprise adoption, and real ROI from AI deployments. Diversify. Exchange funds and ETFs can reduce single stock concentration and stress test scenarios. If you're an employee with concentrated equity, consider planning exits or swaps. Short version, be opportunistic but cautious. The tech is transformative, but markets can get carried away.
Wise words. Don't buy the narrative blind. Buy the business. Thanks for the reality check.
Anytime. That's a wrap, until the next wave of headlines bites off a new corner of our attention. The preceding audio summary was created at jesterengine.com, where you can find and verify the original sources.